particularly that has not given in a particularly encouraging for investors. Oh, it's encouraging for investors because the bond market is still kind of hanging in there at long-term rates. But the year to date, the S&Ps are up 14.5%, and the Nasdaq is up almost 30%, 29.9. And still, bond yields are kind of, taking the wind out of some of it. I mean, not much, but they're still going rallying here, much as we think that nothing's going to happen. Core inflation in Europe actually came out this morning, and that is got a little bit better than expected. And it fell. The core was they were expecting 5.4, came out at 5.3. So inflation numbers starting to maybe adjust there a little bit. We'll see what happens there. So all these interest rate hikes, maybe some of them coming to fruition here, and maybe they're doing what they're supposed to be doing. We'll see. Obviously the Fed is out there still saying they're going to raise rates, so that's still putting a damper on this market. But still, where would this market be if they said that they're done raising rates? And being very stubborn, right? All right, there are the levels in the chat, as you can see. This last day of June, coming into a long weekend. Remember, the only reason that the markets are going to be open on Monday is because they can't be closed for more than 72 hours, and the fact that the 4th is as a holiday here, and we're going to be closed on Tuesday. I think a lot of people are going to extend that this weekend here a little bit. So you got to keep that in mind if you are trading here. That Monday is probably going to be a very slow day, and I won't be here, but I think that I don't think we will be here. Let's put it that way. There's no reason I don't think it's going to be very, very light. It's going to be skeleton. You don't want to be trading in skeleton levels and stuff like that. They can run it on you on nothing. So keep that in mind. If you're really wanting to trade, I guess it'll be there. But keep in mind that it's going to be very, very slow. Don, what's the VIX trading at?
$13.35.
13.35.
Yep.
So when I come back after my little trip, maybe we'll be down to the 8-9 area.
I keep looking at it and say, well, if they're going to make it by the end of the month, they better hurry.
Oh, we have another month.
So, no, it's supposed to be the end of this month.
Oh, well, that's not happening. And not especially with with these numbers that came out yesterday. That was a very big positive number for the market.
When you're over there, you'll have to try out the cantaloupes. I hear the cantaloupes are to die for over there.
I will do that, and I will make sure I let you know how good they are.
Okay.
Is that what you're going to do next? You're going to invest in a cantaloupe farm or something?
No, actually, I'm growing some out there.
Of course you are. I should have known.
I've got a few cantaloupes and a few watermelons and cucumbers and bell peppers, and tomatoes.
Wow. And
Uh,
how does all that fare out with this heat that you're getting?
well, the tomatoes are basically finished. They don't like this heat. The cucumbers, they just keep going, and the bell peppers, I'm giving stuff away to say, here, take it.
Hmm.
And the watermelons are just now starting to, and the cantaloupes are just now starting to ripen up. I was shooting for the 4th of July, so we'll make it.
Oh,
And
nice.
and
And
so,
and 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 you those grow on in the ground, right?
yeah, well, I'm actually growing them in a pot, believe it or not.
Really?
Yeah, I've got like a 25 gallon pot out there. I just throw a few seed in them and they just jump out of the pot and run.
Well, that's a big pot.
Well, my tomatoes I grow in 100 gallon pots.
Oh, there you go. Nice.
So,
Very
but
nice.
they tell me the cantaloupes, I guess, are kind of like pineapples from Hawaii. They're just to die for when you get them fresh.
I will definitely try to find what delicacies they have over there and make sure that when you go over there, tell you where to go.
All right, sound like a plan.
Yep. All right. Let's see here. We are kind of hanging up here on these highs. 79. You got levels above there, Don? I'm going to send you what I have.
Uh,
I'll text you some of the upside levels that
my charts are down.
What's that?
I said my charts are down. I turned them on this morning and something's happened, and so
Okay.
trying to figure
Well,
out. But yeah, I can get levels. Just keep. But send me what you got.
yeah, okay. This is a pretty strong rally here, that's for sure. So here's the thing, even though we're getting some good numbers, people are, these economists are still suggesting that the Fed should continue to raise because of their 2% inflation target is not even close, even though things are getting better. And the reason that they should continue to raise rates is because they came late to the party. So again, you're getting people who are, the very stubborn people, the hawkish people, are continue to want more rate hikes. All right, we continue to slowly uptick here. We're looking at the 79 here. And a little resistance area where, again, we haven't been here in a while. So the market is definitely in territory it hasn't seen for a long time here. It's been a while. And so there's going to be some stops, and that's why we have to make sure you keep your stops in place and look at the price action as well, and then determine, how you're going to trade around those areas. Because again, levels I haven't seen in a bit, but they are there. We go back and try to work them and find them. And welcome to some of the new folks that are here. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we gave out in the chat. If you look at the chat, you'll see the levels there for you. And then any price action opportunities that might occur once the market paints some bars. Combination of both of those gives us our opportunities to trade the setups that we're looking for, and we're scalping the market. So we're looking for rotations off of to try to take advantage of ebbs and flows of the market. And so we have resistance, which is a little sell area up at 79. And in either case, whether you have support areas or sell areas or resistance areas, you're always keeping your stops in place. And right now we're looking 2-3 point stops and anywhere in that range with that same amount of target price targets, at least initially. And if you are trading multiple contracts and you can peel off some contracts and take some profits and maybe leave some for a bigger move, then that's great. If not, then just take your profits and move on. Nothing wrong with that either. So that's what we do here on an everyday basis. Let's see here. We got what else we got coming out this morning. We have consumer sentiment coming out here at 9 o'clock, and then also Chicago PMI coming out here in about a minute. Chicago PMI number is a fundamental number that's going to be released, and that'll be coming out here momentarily. So if you don't like to have any positions on when numbers are released, be a little bit mindful of that. That there's a number coming out here momentarily that might affect the market movement and add some volatility. And depending on your risk tolerance as a trader, will determine whether you get into the trade here at the 79 area or not. But this number will be out here in about a minute or so. All right, we got right up to 77, 75 there of all places. All right, the number is going to be out here momentarily, so keep that in mind. You can see how the ladder ticket kind of lightened up a little bit here, so be careful. The number is out, and just kind of didn't really affect the market. So be a little bit careful. They got up to 77, 75 and rotated off. So if you were looking at the scaling into around the 79 area and you got into 78, if you had 78, obviously you didn't get filled. So you'd have to adjust here a little bit. If you're going to take it at all, if you're more risk averse, you're not taking the level. Again, we like to scale in around an area. Obviously, we're not going to be perfect. As you can see, I like to scale in a point above and below. And I just missed out on my entry point there at 78. And maybe I will, because of the price action, if I still want to take the 79. And again, there's people here who, if you missed it by a little bit, it becomes a lot riskier and you're not going to take the level anymore. Other people are going to adjust a little bit, maybe to take the 78, maybe up to 79, or maybe just leave the 79. I'm just giving you different ways of handling risk and managing it based on the price action here, which is what we are trying to do here. So again, nice rotation. We just missed our entry point by just that much, unfortunately. So the 79 area now is a little bit more riskier. Since we just were off just a little bit. Hey, and that's going to happen. We do have consumer sentiment coming out here at the top of the hour. Could be a little bit of a market mover, so we'll see how that plays out. So be careful here if you're going to trade here. See where we're at the top of the hour. A little support right now would be back at the 60. 3-4 area against our 62. Although there we had resistance, so we'll repeat the levels again in the chat for you. And there they are. Our first resistance area, as you can see, was 79, and we are scalping the market here. So we're trying to take advantage of ebbs and flows of the market. We like to scale in around a level and then take advantage of any rotation against it, whether it be support level or not. You can see here the market got up to 47.75. We missed our entry point by, I should say, 77.75. So we missed our entry point by just a little bit. So now if you're scalping, you have to, we like to scale in around an area. So I had my scale at 78, 79, and 80. Obviously, I missed my entry point there at 78 because it got up to 77, 77, 75. So now I have to understand that it's a little riskier now taking the 79. So I adjust my risk and my entry points a little bit to take into consideration the price action which just happened just prior to that. And then once I get into a trade, if I decide to get into the 79, but again, I'm trying to explain the risk here. So it's a lot riskier this time around. But if you're more risk averse, you're going to wait for the next level up at 89. If you're going to take the 79 here, maybe you scale in at 79 and 80 instead of 78. I like to scale in 78, 79, 80. I adjusted that. I got rid of the 78. So I'm trying to get in here at 79 and 80, but I only 57 traded there at 79, but we're still on the same bar. So we'll see what happens. Now I got built here at 79, and we'll see what happens on this rotation. Again, I'm just trying to take a couple points, but I also have my 80 up here on my scale. And I'll just try to get a couple points out of this if I get a little bit of a rotation. If I'm trading multiple contracts, I'm going to try to keep a little bit for a little bit more. But it is Friday, and we are on the verge of a long weekend here in the United States with 4th of July weekend coming up. So, if we can get a little bit of money, it's going to be very, very slow on Monday, almost to the point where it's probably not worth trade. And obviously, you have to keep that into consideration if you are going to be trading, because the volume and volatility is going to be very nil on Monday. So if we can make a little bit of money here on Friday and enjoy the long weekend, that'll be fantastic. It's trying to give us a little bit of a rotation here. There we go. Again, we're just trying to eke out a little bit of profit here based on the fact that it's Friday. There we go. We got our quick 2 points there. Very minimal heat. Did not get my 80. That I did not get. So now that I made money out of 79, I'm probably going to, cancel the 80. And I have maybe 2 more contracts. I'm going to just have a trailing stop here and see if it can't get me a little bit lower. I'll try to get, it'd be nice if I can get down to 73 area. But this is how we trade. We're looking for areas of support and resistance where we would try to scalp the market off of the levels and try to take advantage of the ebbs and flows. So again, we're scalping. So again, I took profits there against the 79 when it rotated off of it. And now we just got a little bit left over. I'm not going to lose any money on the trade if I get stopped out. And depending on how you manage your trade now, that's dependent on each individual's risk tolerance. So as I always keep saying here, everybody trades it just a little bit differently. So I just kind of walked you through what I was doing there. I hope that helped. Somebody asked, how do you stay short? Sometimes it's very difficult to stay short, especially when the market doesn't give you the ability to stay short or long. And sometimes I suggest to go into the bathroom and just keeping your stop in place. Because the market wants to get you out of a trade. Just remember that, right? That's what it tries to do, and it does a good job of getting you out of trades, right? Good or bad, right? So that's the market's job, and your job as a trader is to, keep your stops in place, keep your discipline, and take advantage of the opportunities when they present themselves. All right, so we do this on an everyday basis in this trading room, and if you have any interest in what we do, let us know, and we obviously have a mentoring class that helps try to focus in on these how to find these areas and levels and how to trade them depending on your risk tolerance and to maximize profit potential. All right, we do have a number, like I keep saying, at the top of the hour here. We have consumer sentiment coming out here. We like to be flat when fundamental numbers are released. So I will keep that in mind as the market gets a little bit closer to the top of the hour here, as there's a fundamental news number, the consumer sentiment number that's going to be released here. It's the upgrading of Fed's legacy uh, capabilities in terms of efficiency and competitiveness. The Fed now real-time payment system is set to launch in July. 57 financial institutions and service providers, including JP Morgan, Wells Fargo, have signed up for the new innovative infrastructure. The network aims to eventually reach all 10,000 U.S. financial institutions, and the discussion is already kicking. So that's what they want to do. They got a new way to pay the Fed. Again, if you're trying to stay short, we're just trying to see if we can't take a little bit more out of those trades. But like I said, you're not going to lose any money on the trade. I would like to, if we get down to 73, 74, be a nice place for me to cover. If I have any, if it lets me for the number, who knows? I don't know. If not all, again, like when you came on and I suggested, I was telling you the risk. Sometimes, depending on volatility, sometimes you might have to, even though I have a level, the levels are not etched in stone. They get tweaked a little bit, like I tried to explain. And so, do I always take the short when against resistance? Not always, but I will say that's all dependent on price action. And sometimes the price action is there to so you can adjust to the volatility. Other times, again, that is also an individualized thing, right? I mean, everybody here, you have to be here a while to see how the numbers work, the support and resistance areas, and then you have to determine on your own whether you want to keep trading the levels, every level, or whether you want to go short or long those levels. So again, that is something that I can suggest a certain ideas and concepts, but it's up to you as a trader to find those concepts and ideas that you are comfortable with. So some people like to take the risk, is what I'm trying to say, and some people don't. And that doesn't mean that one person or the other, right? One person is right and one other person is wrong. So keep that in mind. All right. In the third estimate of GDP, the Department of Commerce reported U.S. economic growth expanded 2% year to year in the first quarter, revised from the prior 1.3%, exceeding economic expectations of 1.4%. The change reflected upward revisions to exports and consumer spending, offset the downward projections of non-residential fixed investments and government spending. The news pushed U.S. Treasuries higher as the yields went up a little bit and widened an inverted yield curve further, while the stock market ended up the recession broadly higher. That was yesterday, obviously. So we shall see. Do have a number coming out here in about 3 minutes. So keep that in mind if you're going to be trading. All right, again. Oh, happy 4th of July to you too, Mr. Caveman. Always good to see you drop by every now and then. You and Brad like to keep chit-chatting away all the time. I'm always in the background listening to you guys chit-chat. But always good to see you. Come early for you. This is early for you. All right, we do have a number in about 2 minutes here, so keep that in mind. Then we're right here hanging around this upper first resistance area. And again, I'm not. I like to be flat when numbers are released, so that's that. I'm going to be out of any extra contracts I still got going on. Now, of course, I understand. Nothing wrong with that. All right. Well, we got this number going to be out here momentarily. We'll see what that's going to bring to the table. See here if they lighten up the load here in the bids and the offers. They are a little bit lightened up. There's, you can see here, just not too many 100 lots up and down the ladder ticket. Consumer sentiment could be a little bit of a market mover. We'll see where that goes. Again, the market is very buoyant here. Very happy little market. As you can see now, they're really lightening the bids and the offers. There's 40s and 50s now. No hundreds up and down the ladder ticket. So they're lightening up the load here, waiting for this number to be released. And then we'll see where it takes us. Bond market really lightening up the load. If you look at the bids and the offers there. There they are. They're all disappearing. So if you didn't know that there was a number coming out, you can always tell that something's up when you see the ladder ticket completely lightened up there. Again, a little bit jumpy. The right word, jumpy. Yeah, very jumpy. As the numbers out now, you can see how light they are. And slowly the bids and the offers come back into the fray when things didn't get away from anything, and they can put their bids and offers back in. This next level on the upside we have is up at the 89 area. Support right now would be around our pivot there at 69, at least for the time being. But as you can tell, it's just gotten up here. Now they're just kind of hanging. Anybody have any questions? Feel free to ask in the chat. We don't mind questions. We like questions. And let's explain, especially the new folks that are here. One thing we talk about is having a little bit of discipline, waiting for opportunities. I know sometimes the tendency is for traders to want to trade because they see the numbers flickering on the screen and they feel, hey, I should just find a way to get into this. Well, if you like the thing not moving around anywhere, going back and forth in a little bit of range, then go for it. All right, we'll continue to uptick here. Why are my support and resistance area different than the numbers in the indicator prior days? Well, I mean, I don't. First of all, I don't know what the. I mean, we do our own work here, so I don't know what the numbers are. I don't know how they figure out their levels, and the work that we do. We find our levels on from the work that we have that we do. I don't use any indicators here, so I don't know what NinjaTrader uses or doesn't use. So, I don't know why. I don't know what they. Well, I don't know what they're doing. To be honest with you, so I don't really. We do our own work here to get the levels that we're looking for.
He may be referring to pivot points.
Okay. Either way,
Yeah.
either way, we don't. I don't know what. I don't know how other people figure out their pivots. I know the standard one of the take the high and the low and divide it by 3 or something like that, and that's okay. Not something that we focus in on. We kind of keep our own thing going. All right. Again, we continue to slowly uptick here. We set support at 69. Now the market continues to go up. We're looking at resistance up at the 89 area. Again, first of all, rallies are our markets are very difficult to trade. That's the first thing. And then today, given the fact that it's on the verge of on the heels of a uh, a long weekend, I think the afternoon trade is going to be exceptionally difficult to trade. And given that it's Friday, we absorbed a lot of news that came out this week. And so I think once we get through the morning hours, and we do focus on the morning hours to give us our opportunities, those are what we try to focus in on. We think that the opportunities in the morning suit our methodology of trading better than the afternoon trade, and the afternoon dynamics are different and don't suit our methodology as strongly. The levels are good for the whole day, but the price action opportunities do change as the day goes on, and it's simply because there are less traders trading. The ebbs and flows are a little bit different. The dynamics change. What traders are looking for changes. So a lot of different things go on in the afternoon that we rather just focus on the morning hours. And so, saying that, we like to average about 4 to 5 trades a day. And average is the key word. There's obviously going to be some days where the market is very volatile and moves around, and we'll get many more opportunities. And then there are other times when the market just slow and not going anywhere fast, and going to lessen the opportunities for us. So we're definitely at the mercy of volatility in the market, and we have to keep that in mind when you're trading. And this is where the discipline part comes in, and to be patient and wait for the opportunities to present themselves. Oh, we're back here on these highs. We're looking at this 89 area here. A little support would be around the 69.70 area.
You gonna send me those numbers in email?
Maybe I'll text them to you. How's that?
That'll work.
Okay. You can do it now. All right, we continue to slowly uptick here a little bit. If I knew we were going to rally, I would have told us all buy it. I didn't know. And if you knew we were going to rally, why didn't you tell me? But again, we are not here to guess which way markets are going. All we're trying to do here is take advantage of ebbs and flows of the market, and we're trying to find areas that we will have, that the market will give us those opportunities to take advantage of those ebbs and flows of the market. Usually when I come in here with some kind of opinion, the market knows how to tell me, stop being ridiculous. You should never have an opinion. I'm too smart for you. Usually happens. Market is usually smarter than all of us.
Send it to that email address. I can't hardly read it on this phone.
Oh yeah, you got one of those little flip phones?
Yeah.
Oh boy. Oh boy.
I put the email address.
Yeah, I see. Okay.
I expected more out of that 82 area.